Namaskar and welcome to the weekly commodities audiocast, your go-to source for latest developments in the world of commodities. I'm your host Ravindra Rao from Kotak Securities Commodity Research Desk, and I'm thrilled to have you join us today. Investors' nerves are on the edge as the FOMC, that is the Federal Open Market Committee, and Bank of England gear up for the respective meetings, while the latest US economic data and China's liquidity boosting plans contribute to the wavering risk sentiments. The greenback surged to a 6 week high last week at around 103.81, and US 10-year Treasury yields approached 4.19% following robust economic data, prompting traders to adjust their expectations for aggressive rate cuts. The US economy defied recession calls, closing 2023 with a surprisingly strong 3.3% annualized growth in the last quarter and a full year growth of 2.5%, exceeding forecasts. However, not all data brought good news, with the US durable goods order in December and a higher than estimated 214,000 initial jobless claims last week, disappointing investors. In its January meeting, the ECB, that is the European Central Bank, opted to keep deposit facility rates at an all time high of 4%, signaling a commitment to maintain these rates to address concerns about a looming recession and easing inflationary pressures. Despite the challenges, the ECB remains determined to bring inflation back to its 2% target. Coming to commodity specific, gold prices on the COMEX fell to a 1 week low of $2,004 per ounce as hopes for an early Fed pivot to monetary easing diminished. Strong retail sales figures and higher than expected Q4 GDP numbers highlighted US consumer resilience to high interest rates. COMEX silver experienced a similar trajectory, initially slipping to near $22 per ounce but recovering as industrial metals rallied, pushing it above the $23 per ounce mark. On the technical front, gold is still holding. On the international front, it is holding the $2,000 level mark. Exact support is near $1978, which is the 200-day, which is the 200 simple moving average, and it is currently trading close to the 60 SMA, which is at around 2023. So if it sustains below 2010, there is a possibility it might fall towards 1978, which is the 200 SMA. Similarly, on the upside, it has to breach 2040 odd dollars, which might trigger buying because 2040 is a trend line resistance, and if that is taken out, we might see prices further going higher towards 2080 plus levels on the higher side. Similarly, in MCX Gold, support 60 SMA support is near 61,800, and prices have closed above that. If it closes below 61,800 and if it sustains, we might see further downside, or else it might consolidate. And the resistance is near 62,300. If it sustains above that, we might see prices going once again higher towards 62,900 levels. Similarly, in case of silver, silver gave a good rebound from the strong support zone near $22 and has moved higher close to $23. It is currently trading near 23, and the immediate resistance is near 23.16. If it goes above that, we might see prices going higher towards 23.63. The trend seems to be slightly positive for the week, and until $22 holds, there is a possibility it might trade with a sideways to higher bias. In case of MCX silver, again, price took support near 71,300. It breached 71,300, which was a good support, but it did not sustain, and price have once again moved above the 71,300 mark. There are two major hurdles. One is the 200 SMA, which is near 72,620, and the other is near 73,185, which is the 60 SMA. Once it breaches this level, we can say that a temporary bottom is in place in case of silver, and the prices might further move higher, or we expect it to trade between 71,300 on the lower side, and on the higher side, immediate hurdle would be around 72,600, 72,680. Coming to energies, global trade disruptions in the Red Sea and a significant draw in US oil stocks propelled WTI crude oil prices to a 2 month high of $77.5 per barrel. US inventories fell over 9 million barrels last week, six times more than forecasted, reaching their lowest level since October. The ongoing threat from Yemen Houthi group to target ships linked to Israel until aid reaches Gaza adds to the concerns about the elevated prices. On the charts, price is close to the resistance in case of WTI crude oil. If you look at the price action, 14th November high was near 79.77. After that, 30th November high was near 79.68, and it has again tested the 79 level, and it is holding up. The good news is that the prices have moved above the 200 SMA, so the support now is near 77.60. Until it is above that, the prices might stay elevated. But if it breaches 78, 79.80 and or 7 or $80 on the higher side, and if it sustains, then a new rally might begin, which might take prices higher towards $84. If not, there is a possibility it might consolidate. And as I mentioned, 200 SMA is near 77.60, which would be the initial support, and the next support would be 76.80. Similarly, on the MCX 200 SMA, it is still below the 200 SMA, which is close to 6417. If it sustains above that, the prices might move further higher, and the next resistance is pegged near 6300. So initial hurdle would be 6417, and on the lower side, the 60 SMA is near 66184. So that would be the support. So we expect the prices to trade in between this range, but if it goes above 6420 on a closing, then the upper range might change to 6600, 6650. Finally, coming to base metals, LME base metals rallied last week on back of optimism surrounding additional stimulus from China. Reports of Chinese stock market rescue package and comments from PBOC governor about cutting the reserve requirement ratio for banks in early February fueled the rally. The rare move of preemptively announcing a reserve requirement ratio cut in response to economic concern underscored mounting disappointment with the government's actions. Copper and zinc surged to their highest level since early January, while aluminium crossed the $2250 per ton mark. Positive developments in flash manufacturing PMI in the EU and UK, coupled with expanding factory activity in the US in January, provided additional support. On the price front, we had mentioned in our previous podcast that copper might take support near 712, and if it sustains below that, we might see prices going further down, or else a bounce back is possible. It exactly held the support, although it intermittently it fell towards 711 odd levels, but it did not sustain, and the prices have moved back again above the 200 SMA. So now the support would be 722, and below that the support would be at 718, and strong support would remain near 712, 711 levels, below closing below which might again fuel some bearishness. Otherwise, we expect prices to trade on the positive side, provided 722 holds, 722 to 718 holds on the lower side. In case of zinc, the price is once again approaching the 233-34 levels, which has been holding up since October. The prices have retreated from that level almost three times. So that would be the major resistance, and on the support side, 225 is the initial hurdle, which is a 60-day SMA. Until that holds, the prices might consolidate between 234 on the higher side and 225 on the lower side. As the market shifts focus to the upcoming US core PCE data, estimated to have risen at an annual pace of 3% in December, down from November's 3.2%. Investors anticipate potential relief if core PCE continues to cool. This comes ahead of the FOMC meeting, where both FOMC and BOE are expected to maintain rates. Market participants will carefully scrutinize policy guidance with particular attention on any softening of language by Fed regarding progress in easing inflation, which could impact the dollar given the ECB's recent stance on rate cuts. Yeah, I missed dollar. Dollar index is close to the resistance. It is trading close to 200 day SMA, and we have seen price. It has been holding up the 200 SMA, Price have gone up, but it has not sustained. Ideal resistance would be 103.80. If it closes above that, we might see further upside, or else it might consolidate. And on the lower side, 103 remains a good support. Below that, it might again start falling. So we need to watch for these levels in case of dollar index, which would give a cue um, um, uh, on the commodity prices. This week we also have a US labor report, and also the upcoming 0.5 percentage point cut in China's reserve requirement rate on February 5th. And indications of additional stimulus might offer a glimmer of optimism in an otherwise uncertain landscape. So, lot of economic data this week. So keep a watch on dollar index. Keep a watch on the levels that I mentioned in case of commodities. Thank you for tuning in today, and we look forward to having you with us again next week. Until then, happy trading.